Morning everyone. எல்லாருக்கும் வணக்கம். அர்ச்சனாவும் நானும் இன்னைக்கு we wanted to do a webinar because first salary இருந்து if we are able to use that effectively எப்படி எங்களால கோடீஸ்வரி ஆக முடியும் and how can you use this opportunity and get the tone right from the beginning. This was the basic idea behind what we wanted to do in this webinar. We'll wait for 2-3 minutes because we are still seeing people join the webinar. So ஒரு 5 நிமிஷத்துல நான் ஆரம்பிப்போம். ஓகே, ஆரம்பிக்கலாம். ஸோ உங்களோட ஃபர்ஸ்ட் salary வந்து ஆக்சுவலா ஒரு சூப்பர் பவர். நீங்க இது பத்தி யோசிச்சு பிளான் பண்ணீங்கன்னா இங்கேருந்தே உங்களுக்கு 1 கோடி. Sure, we can talk in English. That's not a problem. Is English comfortable for everyone? Can you just quickly give a thumbs up if it's okay to talk in English? Okay. So what we can do is if anybody is not comfortable with English, please put it in the chat. We are bilingual, so we can talk in both Tamil and English based on your preference. So to begin with, we wanted to do a webinar on your first salary and how that's a superpower, simply because a lot of us don't get the right advice early enough in our journey. We start to get advice only much later, and by which time the foundation is already set in a different manner, and some level of correction has to happen, and you miss out on doing the right things early on. So you lose that power of compounding that can kick in. So today we're going to talk about a few important things. The structure of our webinar is we'll take you through our presentation, which would take maybe 30 to 40 minutes, and we'll have time for Q&A. So any questions that you have, please feel free to type it into the chat box or in the Q&A section. So உங்களுக்கு ஃபர்ஸ்ட் salary பத்தி ஏதாவது கேள்விகள் இருந்ததுன்னா நீங்க chat box இல்லாட்டி Q&A செக்ஷன்ல நீங்க அது அனுப்பிட்டீங்கன்னா we can answer it at the end of the webinar. So why are we having this conversation today? What we are noticing with a lot of women investors is that you are earning more, but you actually own less. So this is a big problem, right? If you're thinking about it, more women are entering the workforce. That age of not having equal pay as somebody when you start out is really not there anymore. Yet when it comes to wealth, women actually still own less. So this is a gap that we need to take control of and fill on our own. And there are enough ways for you to do that. So in the early stages, the question that comes to any young professional is, should I be saving money now or should I be spending? Because the salary when you start out is actually not reflective of your full potential. Only as time passes, you start earning more. So that question of saving or spending becomes very important to address. Obviously, the answer is that you need to save right from the first paycheck, because this is about building a habit, and the habits get stuck to you only when you do it when it's difficult, right? It's very easy to maintain a habit if it's easy, if there's no challenge or if there's no constraint. The minute it's tough to do it, that is where your discipline kicks in. So if you are able to convince yourself and find some way to save money from the first paycheck, you are always going to be able to save money. This is actually the key to financial security. It's the key to creating wealth. Now, once you realize that you have to prioritize saving and you have to prioritize investing and not just having that money idle, the question then gets into, okay, how much do I really need to know? Because neither does school, nor does college, nor does your workplace prepare you to create wealth. All of them orient you towards getting a job, but nobody tells you how you can create wealth. And you can't really create wealth from salary to salary. Wealth is only created when you invest and you're able to create some financial security through some other assets. And this can be done one salary at a time. So I'm going to tell you a very simple story. Okay. We have two women. We have Anu, who from her first paycheck decided that she can do an SIP, which is a systematic investment plan, the type of way to invest in mutual funds, where it's very similar to a recurring deposit. So every month on a specific date, 5,000 rupees goes from Anu's account into her mutual fund account. Ria, on the other hand, decides that okay, she can also put aside 5,000 every month, but she doesn't take the effort to invest it anywhere. It just lies in her bank account. And so at the end of the first year, she has about 50 to 60,000 rupees. And every year it grows by that same amount. So what happens if we fast forward 5 years in time? So Anu's managed to invest 3 lakhs and Ria's managed to save 3 lakhs. So now I'm going to show you 3 important numbers and I want you to take a guess as to what it means. So you can, I'll unmute everyone. And if you want to take a stab and see, okay, what are these 3 numbers? What is minus 40,000? What is 38,000? And what is 4,12,000? Any guesses? Okay. So I'm going to give you 1 minute to think about these 3 numbers. We've discussed the story of uh, Anu and Ria and how they've been saving over the last 5 years, and they have about 3 lakhs that they've put into their respective investment choices. Okay. So if there are no guesses, let me walk you through what these 3 numbers mean. The first number of minus 40,000 is Ria's number. And this is the real return that she has made. So in finance, when we talk about real returns, it means after inflation, what is the return that you have made? So while Ria earns some interest, which is today, I think if you have money in the bank account, it will earn somewhere between 2.75 to 3%. So that grows to an amount where she actually loses 40,000 rupees because of inflation in 5 years. So keeping your money in the bank account is not a solution for wealth creation. You will only lose money in the long run. Uh, some amount of money in your bank account makes sense because you need that liquidity. There might be sudden expenses, but your entire long-term savings cannot go there. So now if we look at plus 38,000 rupees, what is this amount? So this is the real return that Anu has made. That is post-inflation after her mutual fund portfolio grows to 4,12,000 rupees. The real return, that is the profit after accounting for inflation, will be about 38,000. So it is your choice whether you want to be in plus 40,000 or minus 40,000. And that just boils down to a simple decision of setting up an SIP today. So if you wonder, like now if we think about what is it that is holding people back, right? Why is it that we are not able to start our investments? It's because we think that we'll start when the time is right. But the hard truth that all of us need to digest today is that there is no right time. If we keep waiting for the right time, it's never going to come. In the early years, you're going to feel that you aren't earning enough or that you are not able to spend on yourself as much as you would like. As time progresses, your financial commitments will go up. Because you were not able to build that habit when it was a tough period for you to have that habit, you will find it even harder to do it in when it's easy to build that habit, right? We need to be able to create that discipline as early as possible. And that's the only way it's going to be an effective solution. So if you're thinking that, okay, when I get my next pay rise, I'll start saving. That's not going to happen. Usually what tends to occur is that if we get our pay rise, then automatically your income goes towards lifestyle inflation, right? And that's a real thing. We have to very actively focus on being able to save small amounts of money, because small amounts of money can also grow into big amounts of money with the right habits. If we are not disciplined with our monthly expenses, right? If your 1 month expense is going to be very high, another month expense is going to be low, then you don't compensate in terms of savings, you are going to have some difficulty in getting things right. And if you keep pushing it by 1 year, I had a friend, we started working together at the same time. And she said that she would start investing a little bit later because she was living out of town, so she had more expenses. But she started saving only 5 or 6 years after she started working. That is a long period of time to lose, right? We just showed you with 5,000 savings every month. In 5 years, you could have anywhere between 4 to 5 lakhs. So, is that the kind of money that you want to lose to indiscipline? Is a question that we have to ask ourselves. So, with this, I'll hand it over to Archana.
Yes. So, as Sam also pointed out very clearly, like from the first salary onwards, we need to think about how we are gonna, create wealth. We have like we see, what like, the traditional way of saving, right? Where many of us saw our moms save money in chit funds or gold chits, and dads putting money in FDs every year. But actually, if we ask ourselves, as has it really built wealth or just given peace of mind without any growth, right? That's a point we need to answer. So we just need to understand how the traditional investments work, and whether that is actually relevant to date, whether it's outdated or it's updated. So when it comes to gold check fund, what really happens is you put money every month, right? And at the end of the year, you get gold. But again, if you think about it, there is wastage, that you need to pay, that VAT you need to pay, and all that is there. So it's actually not that you are really getting the value for what you are paying for. Instead, what, instead of gold chit fund, you can actually, put the money in equity mutual fund and let it grow for so and so year, for like 5 or 6 years. And when you actually need gold, you can withdraw the money and you can buy the physical gold as and when it is required. Because physical gold has a, has so much emotion with us, right? Like we are not gonna sell it. Or we may pledge it unless it's very urgent or it's very necessary. We may think about pledging it, but just keeping it as such in our locker, and paying a fee for that locker also, it's not going to make much of a sense, because we are not going to use it whenever we need it. So where the gold chit fund or gold chit as such is not working for us is we are giving money to the the jewelry company, so that the jewel so he is gonna put your money, all of your money, club it together. He's gonna put your money, and he's gonna take the gold and give it to you. So instead of that, you can just simply invest in an equity MF and slowly build the portfolio or build your money, and then just take it out whenever gold is going low, right? Whenever the the gold price drops, right? Then you can just withdraw some portion of it. And also, if you want to buy, you have any need for a physical gold, let's say your child's marriage is coming up, or you need to do it like a relative's function is coming up where you need to give some jewelry to them as a gift and all that, then at the time you can withdraw whatever amount that is needed, and you can actually buy gold whenever it is needed. And one thing come to chit fund is that chit funds look easy, right? Because people put money, one person gets it every month. But what we really need to think about is, what if someone doesn't pay or vanishes? Because it's not a very new thing. We read it in newspaper. We see, people, our neighbors face this kind of issue where they put money in a chit fund, and then suddenly the other person or one other person vanishes, and they take up the burden of, paying the money. So no guarantee, no legal safety, yet every woman, wants to invest or wants to put the money in the chit fund. So this is one thing that needs to be done. And many women lose money quietly and they never talk about it, because they think that that's the mistake that they have made, that guilt that they take, and they are not talking about it. Yet they want to catch it up with another chit fund. So that is one of the problem. And the third most thing to it is through banks that you we often do is fixed deposits. And the problem with FD is they feel safe, but after taxes and inflation, if you see, it hardly grows. Because let's say inflation is 6% and FD just gives you 5%. Think about it, you are actually losing money in real terms. So go chit funds or FDs, the point is they are not dangerous, they are just outdated. It is not going to work for you anymore. So, what we can do? So, that's when the mutual fund question come in. So, here we are gonna discuss about how mutual fund can help you, create wealth, or that could be the modern way of saving your money. So when you see mutual funds, right? How many of you already invest in mutual fund? Like in the, you can just raise your hand. If you just know about it, you can just, unmute and you can tell your opinion. Like, have you invested in mutual funds? Have you, seen your, neighbors or your friends or your spouse or your father, like they invest in mutual fund? Okay. See, when you see the advantages, right? It's actually enormous, because let's take suitability. It's suitable for everyone, meaning that you can, it's like, let's say I am a very conservative investor. I don't want to lose money in market. I just want to make returns just higher than FD and all that. Anyone can actually start with a mutual fund. It's not like you don't need to be a stock market expert to start a mutual fund SIP. It's suitable for any person. And diversity, not all eggs in one basket. Because in mutual fund, a mutual fund manager, the fund manager will take call about what are the stocks that he need to keep in the particular mutual fund. So it's not going to be one company, it will be bunch of companies that he'll be putting it in one basket. So let's say this is not a basket of full of oranges, so that if let's say if one spoils and all other spoils, it's actually oranges, apples, and all other fruits put together, so that even if one goes wrong, right, even if one fruit ripen, the all other will come in place and stand for you. So that kind of diversity will be there in a mutual fund, which is not possible when you just start out with direct stock and put some money in direct stocks and all that. That kind of diversity, you have to take action from your side, you have to build it with care. But let's say you are shifting that responsibility to a fund manager, where you can just sit in peace of mind, where the fund manager do the diversity part. And liquidity, see, two important thing when it comes to the outdated segment, this is the liquidity and the flexibility. They both are very much related, because let's say I have built around one of our Kodeeswari client. So she has built around 1 lakh. So what she did, she has invested some 5,000 SIP, and when in where she gets money, she puts some 10,000, 20,000 as lump sum whenever she gets money. So she built around 1 lakh. And suddenly, the money she expected from outside, like from her business, didn't come up, and her son's education fee, like the fee part came up, and she just withdrawed her around 20,000 from her investment and just paid it. So the point is that whenever you want to take some money out, the liquidity portion is there, where if you want to break a FD, you want to close it prematurely, you need to pay some fees, as a you have to pay some fees in order to take the money out. Or if in order to, it's like a fine levy on, since you close the FD prematurely. Or gold chit fund, think about it, you put money every month, right, savings. One time you are not able to make the payment, so what will happen is that sometimes they'll just close it. So it's kind of like it is very implicit that you need to put 5,000 if it is a gold chit fund every month for the 11-month period or 12-month period, or and so on. So you cannot just come out in between 1 or 2 months. You cannot just pause the that gold chit, or chit funds that you actually do, right? You need to continue it irrespective of you have the cash flow or not. But where here there is a possibility that you can stop or pause this SIP that you do monthly for a particular period of time when you are not able to do it. So the intention is not to pause or stop, but still we have the option to pause it when the situation is not in our control. So liquidity, when you need money, you can just withdraw a particular portion of it as and when needed. And flexibility, when you want to pause the stop, you want to increase the contribution in a period, you want to decrease the contribution, all that you can do with flexibility. So that both liquidity and flexibility are there in mutual funds. And they are highly regulated also, right? So it's not like every penny where it is being invested, in which stock the money is going. So it is highly regulated by SEBI. So there is also discipline that comes in place, where you don't need to take the money out and put it in mutual funds every month. Instead, you just set up a SIP and the money goes automatically, and through discipline you build your wealth. So these are the various advantages that we have when we build wealth through mutual funds. But other than this, let me get you to how do you reach 1 crore through numbers. Let's say you start with a 5,000 SIP, and I just assumed a 12% rate of return. 12% rate of return is an index return that we have taken. So over a 10-year period, this 5,000 invested, like you can see the amount that you have invested is just 6 lakh, but around 10 years, it has actually compounded and doubled, and that has grown into 12 lakhs. And The real compounding comes post 10 years only. So you can see 15, 20, and 25 years. As you can see, from 6 lakh, you're going to contribute 3 more lakhs, which is you're just going to do a 5,000 SIP. But the total value, as you can see, from 12 lakhs, it has actually moved to 25 lakhs. So, and over 20-year period, if you can see, 12 lakhs is the amount that you have invested, but it has grown around 3 times the money that you have invested, which is around 50 lakhs, the corpus has grown. And over 25 years, the total money that you have invested would just be 15 lakhs, but the total value mean you will be the Kodeeswari. So I know that it's been a very long journey that you need to do where you will be very disciplined and continuously investing money, even though market goes down, market goes up, irrespective of that, you have to do this SIP, right? But let's say there are alternate ways where you can, let's say you want to achieve your first 10 lakh within 5 years. So in that scenario, you can do a step up of your SIP. What is a step up? You are doing a 5,000 SIP, and every year you think about increasing it by 1,000. So you do 5,000 this year, then next year 1,000 increase on 5,000 is 6,000, and the next year 6,000 plus 1,000 is 7,000, and so on. So by doing SIP plus step up, you can actually reach your this 10 lakh target within 5 years itself. And let's say you want to increase the SIP, that you have a potential of doing a higher SIP of say 10,000. And this is even more easier. 5 more years you're gonna save, because first 10 years you will be there at 24 lakhs, 15 years you will be at 50 lakhs, and by 20th year you will be at your 1 crore. So from here, let's say at your first salary, you started saving 10,000 SIP, and when you reach 40 years, then let's say 40, 45, or 50, you will be having your first crore in your hand. So this first crore has a lot of financial independence, or it actually gives you a confidence in your financial portfolio, where you don't need to depend on anyone to take a decision. Instead, you can take your financial decisions and you can be the Kodeeswari. And let's say we usually sees, what if someone else manages my money? This we usually get it from our clients, from wherever we meet women, a set of women, we talk to them. It's all about like my dad or spouse handles everything, right? So what is, it's very great. I'm not going to miss anything. But let's say here, this is a case where, for one of our client, when we talked to her, we gave this as an exercise to her, where she can, because in her mind, it was all about, let's say she just started working, she's just earning her first salary, and she thought about putting it in a post office savings scheme, as many of the women do, as her mom did, and everyone do. So she also wants to put it in a post office savings scheme. And also, especially her dad also told her to put it in a PO savings scheme. So let's say we just said, then she reached out to us via Kodeeswari, and then we said she can actually invest in mutual fund. So that could be a best way for her to create wealth. So what happened is that we just asked her, to challenge her to her dad or spouse, whoever tells her that she can just put it in post office savings account itself. Let them put it in post office savings account, their savings of 5,000. Let's say how it is going to make a change in the portfolio. So let's say assume her dad is putting money in post office savings account, is telling her, and she's putting it. So she would have just made 3.5 lakhs in the end of 5 years, and maybe 9 lakh in the end of 10 years, and 15 lakh in the end of 5 years. But let's say she invested in mutual funds with the help of an advisor, and she started seeing the real difference, where at the same 5 year, she would have been in 4 lakhs. And in the 10-year time period, she would have actually reached 12 lakhs. And the real magic happens after 10 years. Around 15th year, she would have actually doubled her corpus. So that's the difference. That's what she's missing when she is saying, my dad or my spouse will handle everything. Instead, she can just do the same, right? where it's not that difficult, where you have an advisor like us with your side, where we will be explaining you, or will be helping you in which mutual fund to pick, where to invest, and how to not make it very risky. So with the correct guidance, I think most of the women, you know who who all are in this place, must go to this place, which can happen, or which will happen only through mutual funds route. So it's not about the see, we are not saying the saving scheme is bad, or post office saving scheme, or FD, or gold, jewelry is bad. The point is that we all are facing inflation, where it is growing around 4 to 5% or 6% every year, and the fees that you are paying to your children's education, it's not the same every year. It keeps on increasing. The amount that you pay on a grocery bill, it keeps on increasing. So at the same rate, higher than that rate, your financial corpus, as in your savings, need to grow. So your savings rate needs to grow. At the same time, the amount that we are investing needs to grow at a higher rate, or at a faster pace than inflation. That is possible only through mutual funds. So instead of relying on the old traditional saving methods, we all can agree that we just used we were just using cash, and a lot of things we were being an outdated situation, right? But now we are using GPay, we are using credit cards, where we pay the bill and then settle the cards. We have actually started adapting to the changing environment, right? So in all other aspects, we are changing ourselves, but when it comes to finance, we are always one step behind. Why? So we need to think about how we can reach our 1 crore. Let's we can keep it that as a target, to reach our first crore through financial uh, you know um, financial portfolio. It's not just through traditional instruments. Through mutual funds, you can reach your 1 crore. And then when you think about it, as of now, everything seems to be a little bit overwhelmed and all that. That's why you need an advisor, that's why you are here, and that's why we are there to help you. So you can reach out to us with any queries that you have, to understand a product, or to understand how your money is going to grow with through Kodeeswari way. And then you can think about how this really gonna make a difference in my portfolio, or how I'm gonna achieve all my goals with the financial portfolio. So I think with that in place, I want Sam to take over.
Yeah. Thank you, Archana. I think you covered a lot of important points. And it's important for us to sort of see that we take control of this journey, and you're not going to be alone on this, no matter how uh, what path you choose, what product you choose. There is going to be someone to guide you, and it's something that needs to be done, right? There is no choice here anymore. We have to create wealth. We have to secure our futures. We need to achieve whatever ambitions we have in life. And I think there are three things that we wanted to cover in today's workshop. I think, Archana, if we can move to the next slide, it'll be helpful, where we talk about what is it that you can take away from today's session. So I think we've given you a clear roadmap in terms of what you need to do with your first three salaries, right? So the first would be in terms of identifying your spending patterns and setting a reasonable savings target, right? You can, depending on how much of a salary is and how many financial commitments you have, I think most of us should be able to start with at least a 2000 or a 2500 SIP. Now, to do this, it's a very simple process, especially if you onboard onto Kodeeswari and you're working with us. We can handhold you through the entire process. The most important thing is getting your fund selection right. And this is where we notice that a lot of investors, both men and women, particularly men, actually end up making a lot of mistakes in fund selection. This is because today, the way the industry is structured, product selection is based on past performance. right? And markets are not linear in nature, they're cyclical in nature. So anybody who's performed very well in the last 1, 3, 5 years, you don't know whether they can do the same thing in the next 1, 3, and 5 years, right? But things that may not look so good, someone who's not been the best performer in the last 3 years might actually be the next winner. So this cyclicality means we need to be a lot more um, decisive about where we want to put more money. So this is where I think we can give you a lot of support by helping you pick the right products, by helping you tell you when you can scale up your investments, by ensuring that you're focused on a milestone. Because at the first salary level, the basic problem that we have seen in this industry is that nobody on the wealth creation side seems to be interested with partnering with young investors, right? Because what they have to offer is only a small savings amount. Now, uh, but not having the right advice at that point can actually affect your financial well-being for years to come. This is where we feel we can add a lot of value, and we are not interested in large sums of money. We are interested in creating wealth through a systematic long-term process with you, and we are committed to being with you for that 15, 20-year journey when you get your first crore. And with the right guidance, if your first projection is in 20 years, we can try to cut that down to 15 or 10 years. That happens through avoiding these traps. It happens through continuous participation, and it happens through scaling up your investments and reaching your full potential. Now, whatever projections we've shown you in terms of how you can scale up your savings are very conservative. As your career progresses, you will actually be getting much larger pay rises, and from that, you can channel more savings. And imagine if you do this for the first 5, 6 years, by the time you're in your 30s, you already have a sense of financial security. You are not going to be anxious about what job you're in. You're not going to be anxious about how you're going to provide for your family. You're not going to be anxious about, taking a career break. Uh, None of these things are going to cause worry. Whereas if you don't start, then I think that's where the real problem is. And we believe that everyone in this room can build your first crore, and you can start now to do that. At the end of this session, for whoever has registered, you will get a Kodeeswari starter guide. And we are also open to doing one-on-one calls, because there are things that you might be comfortable discussing in a public platform. There are things that you might want to discuss only on a one-on-one basis. So this is also something that we would work with you on. And I think finally, uh, can we go to the next slide, Archana? Investing is really not scary. Okay, not investing is what is going to scare you. But the thing is, investing is a fear that you're going to face today. So it feels very present, and it feels like something that you're not very comfortable doing. But not investing is a fear that will hit you only 5 or 10 years down the line. And that is a problem that you can't anticipate today, but we want to ensure that you never experience that fear in the future. Small steps, sustainable steps, and I think that is the secret to really creating wealth. There's nothing bigger than that. So we can open up for Q&A. Kodeeshwari is not a product, it's a program. So it's for like-minded women who want to create wealth. We do this through mutual funds, fixed deposits, as well as bonds in certain cases. The idea is to find, first of all, understand what you want to create, set a target and a milestone that you can work towards, then identify what savings avenues would work for you, understand your risk profile, how you'd like to scale up, and then set up like a wealth map to see what all you need to get done. Because we've covered basically investing today, but there is an element of financial security which also takes priority. So setting up your emergency reserve, having the right kind of insurance, avoiding the wrong kind of insurance products, because this is a big trap that many people fall into. So these are all things that we do, but it's not a product. And you can do both lump sums and SIP. I think the second part of the question I didn't really address, but so there are many different types of women in the Kodeeswari program, right? Meaning we have some women who are home entrepreneurs, we have some women who are entrepreneurs in their own right. So for them, a monthly SIP does not make sense. They can do only lump sums. But even there are milestones in terms of what should your contribution target for the year be like, how can we stretch and achieve more than that, and how do we create more wealth for you through product selection. Um, Ideally, for every investor, we would suggest a combination of both SIP and lump sum. Uh, but based on each person's preferences, that has to be tailor-made.
Hello, can you hear me?
Yes.
Yeah, Actually, you said this Kodeeswari is a program. So, when we apply for this program, then you will help us in investing for mutual fund. You said so. We will be investing we'll be doing that process, or we will give the money to you and you will do the process, or how is it?
So it's very simple. We are an AMFI registered mutual fund distributor. And
Mm-hmm.
that means at no point are you transferring any money to Milestones Wealth or Kodeeswari. What will happen is we'll set up an account for you that is interfaced with either NSC's mutual fund platform or BSC's mutual fund platform. So any money transfer is going to happen from your bank account to your mutual fund account. And there is no in between process where you're transferring money to us.
Okay. Uh-huh. But
We will
who
help
does
you
this
with,
process? Yeah.
yeah. So in this process, we'll help you set up the account. We'll help you
Mm-hmm.
operate the account. We'll give you an interface where you can log in and see your portfolio. We will help you choose which mutual funds are suitable for you based on your goals, your risk profile, and the current market context as well. So these are things that we will do. We will also alert you when there are investment opportunities, right? So let's say you have a monthly SIP running, but at some point there is an interesting opportunity in fixed income or precious metals or equities. If the market corrects and we want to do an additional investment, our team will proactively reach out to you and tell you that this investment opportunity is available. If you have any liquidity, you can participate in this opportunity. Then,
Okay.
of course, on a monthly basis, you will also get your portfolio statements. So, if you want to understand your portfolio, if you want to understand where you're going, whether you're on track for your milestones, or what kind of targets you should be setting, all of this is included within the program. And there is no additional cost that is involved. You don't need to pay any money to enroll in Kodeeswari. You don't need to do anything else. As long as you set up your SIPs or your mutual fund lump sums and the account is ready to transact and we are um, engaged in that manner, there is no additional cost. Over and above this, we do webinars. And today's webinar was about first salary, but we have a wide variety of topics that we cover. Some will be more technical in nature, some will be less technical in nature. So that's all what Kodeeswari has to offer.
So you will do buy and sell, all guidance you will give, or only
Correct.
for investing?
Buy and sell both.
Okay. So in that sense, we will we have to do ourselves when you give the guidance. When we have the liquidity, then we will do the process. We will
Correct. So
invest or
any
buy or sell, something like that, right?
even if we are advising to buy or sell, you will still
Mhm.
have the authority to approve that transaction. So unless you approve and say that you want to go ahead with buying or selling, it won't happen. Right? So it's a
Okay.
two-step process. So we will give you the advice, we will explain why we are doing certain things. You will have to decide and take that decision to execute it.
Mm-hmm. Okay. You also have diversity in gold mutual funds, or
So that is
this is.
something we
Mm,
have done in the past. Right now, we still feel gold is a little bit expensive. So we're
mhm.
not looking at adding gold now. But old clients have some exposure to gold in their portfolios. And we do across all assets in mutual funds. So it is not just equity mutual funds. We also have precious metals. We also have fixed income. We do all the products.
Okay. Okay, thank you.
Thank you so much for asking some very relevant questions which are helpful to other people also who are here today. We still have about 10-15 minutes. So if anybody else wants to ask us any questions, you can go ahead. Archana, do you want to put in the Kodeeswari form into the chat box in case anybody wants to enroll or inquire about what we're doing or have a one-on-one conversation? I think that will
Yeah,
be
sure.
helpful.
I have one more question. Do you have a fees involved for helping us in this program?
So
Is there
like
a
I mentioned,
percentage? Yeah.
sorry, let me allow you to finish your question.
Is there some percentage in the profit it will be taken, or is that like yearly fees or something like that?
No. So just to explain the structure, we are an AMFI registered mutual fund distributor. So we distribute mutual fund products. Within the distribution channel, there is an expense ratio for each mutual fund that you invest in. From that, we receive our fee. So you don't need to pay anything extra, meaning for the webinars or for the advice that we're giving you, there is no additional cost to the investor. It's already factored into your SIP or lump sum amount. Beyond that, you don't need to transfer any money to us. The only paid program that we do is something under Milestones to Wealth called Conclave. It's an in-person event that happens once a year. That is a paid event. Usually, because that's a physical event, we have to hire a hall. We have speakers who are coming from outside, all of those things. For Conclave alone, that might be a paid event, but it's not mandatory for anyone to register or participate in Conclave. If you feel that it's adding value to your journey, you can register. If you feel that it's not something that you want to participate in, you need not. But all of our webinars, all of our workshops in office, as well as the guidance that we're giving you and the communication that we're giving you on markets, all of this is included in the cost of your mutual fund investments itself. There is no additional fee that you have to send us.
Okay. Thank you. And another question is, you are doing this program since long. You have some past fact sheets, something like that.
So Kodeeswari was a program that we launched recently, but we have been mutual fund distributors for a long time. And if we look at the long-term track record in terms of performance, I think it's been around 14% CAGR. That is 14% compounded on a 5+ year horizon. If we are looking at what kind of returns you should be setting expectations at, I think 10 to 12% compounded is a reasonable return assumption from mutual fund investments going forward.
Okay.
So
All
12%
right.
compounded would roughly mean every 6 years you are doubling your money. So if you invest 1 lakh, in 6 years you can expect that 1 lakh to become 2 lakhs.
All right. Got it. Thank you so much for your presentation.
Thank you. I think Archana is just going to drop the link in the chat. In case you want to register or if you want to have a one-on-one, please feel free to reach out to us or fill in the form. It will take you a couple of minutes at best. It's fairly short and concise.
What is this form for? Is this?
If you'd like to enroll in Kodeeswari, you can fill in this form.
Okay. All right.
If not, like if you just want to know more about the program, or if you feel like you want a more detailed discussion, you can just drop us a message on WhatsApp at 93848 02285. That number is on the screen right now, but she'll share the number here as well. So if you're not ready to commit and enroll immediately, but you want a more detailed conversation, you have more questions, or you want to share certain personal goals that you want to achieve through the Kodeeswari program, then drop us a message. We can definitely have a one-on-one.
Okay, perfect.
Right. I don't really see any other questions coming in. We'll still be around for the next 5 minutes. So if anybody else has anything on their mind, please feel free to unmute and speak. Uh, and once again, we want to thank everyone for joining this call. I know it's a weekday. I'm sure there are a lot of commitments at home and at work that you have set aside just so that you can have a conversation about wealth creation. And that's a wonderful first step in this journey. And we hope you're able to take many more steps and achieve whatever big dreams you have on your mind. Okay, I think we can close the event. We're not really getting any more Q&A. Thanks once again for everybody who's joined in today.